What have been the key factors at play here? Let's ask the management. Joining us now on the phone line is the Managing Director and CEO of the company, Mr. Abhishek Jain. Mr. Abhishek Jain, good morning to you and thanks a lot for joining us today on Bloomberg Quint.
Good morning. It's a pleasure to be here today.
Sir, it's been a great year for your company. We've seen good returns in terms of your stock price. Even if I look at the first half, the financials look pretty good. What's the road ahead for the company in the second half of this fiscal and also for FY19 and 20? Will you be able to sustain the kind of growth that you've shown in the first half of this fiscal? Your return on equity and also return on capital employed, all these ratios seems to be improving. Are you looking to introduce any new products going ahead?
This year the industry is expected to grow about 7 to 9% according to the CM and ACMA estimates. And we've seen our part sales grow by almost 15% in the first half. And the similar trend is looking quite promising in the current quarter as well. So we are quite confident of some good growth coming in the industry this year. Then regarding our bottom line, so making our organization lean is a relentless focus for us. So we've been focusing on improving efficiencies across all our manufacturing operations, including the support functions like purchasing, logistics, etc. So in the first half of this financial year, we were able to increase our EBITDA margin to almost 20% levels. And we are making our best efforts to sustain these increased margins now.
Abhishek, hi. What I wanted to know was, from what I understand, is nearly 50% of your revenues come from Maruti Suzuki. I wanted to get a better understanding of your new order flows and the possibility of you diversifying over to more clients and over more OEMs. Can you give us an idea of what the company is doing right now in terms of diversification?
See, scouting for new business opportunities is a relentless focus for us again. And we are looking at adding new customers and new products across the Indian OEMs. So we've recently entered the two-wheeler segment as well. And this quarter we'll be starting supplies to Hyundai also. So that is also going to be one of our major customers for this year. So along with this, now we are setting up plants closer to our customers. So primarily our company was a north-based company. And this year we are setting up a plant in Chennai as well as in Gujarat so that we can cater to the customers over there. Regarding Maruti, so with Maruti Suzuki, we've been associated for more than 30 years now since the day the first Maruti cars were launched. And now the recent SMG plant that is coming up in Gujarat. So we're already set up a plant there to cater to their requirements. So we are working very closely with them for all their future requirements.
Mr. Jain, you just mentioned that you've also entered into the two-wheeler space. Could you tell us what are the initial targets with regard to revenues and what sort of margins are you looking at in this space?
There's no target for the top line with us right now for the two-wheeler segment. So we're just testing waters about this segment right now.
By when can we see the numbers being reflected in your financials from this space?
Primarily, our focus is going to continue on the passenger vehicle market. So I won't see more than 5 to 10% two-wheeler segment being shared by the company. So primarily we are going to stick to the passenger vehicle market only.
All right, Abhishek, if you could also give us an idea about capital expenditure that you have planned out for, say, the next 6 to 7, 8 months, what that can entail and how we are planning to fund that?
This year, we'll be spending about 45 to 50 crores on the capital expenditure totally. And most of it is going to go in the Chennai plant and the Gujarat plant. And almost 50% of that is already complete. And most of this capital expenditure is going to be funded by our internal accruals. So we're not looking at adding any more debt to fund our expansion plans.
And do we see the revenues from Gujarat plant flowing into your financials in FY18?
The full effect will come from the next financial year.
Okay, and what's the current capacity utilization? I remember till the first half it was almost about 80%. Have you seen any sort of increase there?
It's going to be around the same range. Yeah.
All right, Abhishek, I also wanted to get an idea about the domestic market if you pitch that against your exports. So let's start off with the domestic markets. What kind of orders are you getting in from here? And, if you could give us any idea on the growth potential from the domestic markets, especially given the fact that we've started looking at quite an increase in volumes from the automotive players.
See, PPAP primarily caters to the domestic market only. And so any sort of export sales, what we have is the CKD export kits which are being done by the customer. So we are only focusing on the domestic market. And, now I think Indian auto industry is very soon to become the 5th largest in production numbers in the medium term. And maybe a couple of years down the line, we may be trailing countries behind like US and China and become the 3rd largest in the world. So with the support of these macroeconomic factors, I think the automotive industry in India is really poised to become a very important player in the global automotive space.
Mr. Jain, stay on with us. Just want to address those important flashes on the screen regarding Cadila Healthcare. The company has received US FDA final nod for OCD drug, and the name is being flashed there on your screen. Could we just pull up the stock price and see if there is any sort of reaction post that US FDA approval or a nod which the company has received for one of its drug, Cadila Healthcare? Okay, it has reacted to that news. The stock is currently trading with gains of almost 2.5%, and this week especially has been good for the pharma stocks. In fact, the Nifty Pharma Index too has seen good gains for this week. But we'll go back to Mr. Jain. I'm just going to come to the numbers now. In the first half of this year, you've done almost 15 crore of profit, which is an uptick of over 70% if I have to compare it to the corresponding first half. Revenues almost at around 180 crore. Mr. Jain, in the second half, can we see a better performance, or the numbers will look the same, the one we've seen in the first half?
I think it's going to be almost in the similar range. So we're seeing almost a similar growth coming out in the second half as well.
All right, Abhishek, I also had a question on, the replacement demand in the replacement market. Considering the kind of product lines that you are into, how does that shape up? And if there are any cycles that you can tell us about with respect to replacement and what that demand can do for your business as well?
Actually, we don't do any replacement or aftermarket business at all. So most of our aftermarket sales are through the official genuine parts channels of our customers.
Mr. Jain, before we let you go, since the stock price of your company has done pretty well in 2017, would you have any message for your shareholders?
Well, we are doing our best to improve whatever we've achieved till now, and so we're working hard to make the company lean as possible and make it sustainable in future.
Your stock price certainly reflects, the improving fundamentals in your company. Thanks a lot, Abhishek, for joining us and giving us an outlook on PPAP, automotives. We'll be watching out for more developments from this company, but we'll move on to the next trend. And it has been a smooth ride for auto players this year, with the Nifty Auto Index gaining as much as nearly,